Hello and welcome. I'm Suyash Maheshwari and you are watching First Take here on News 9, where we break down the morning action on D Street. But as always, let's begin with how the global markets ended in yesterday's session and how the Asian markets have opened today. Now, after a day of mild correction, US stocks have resumed their uphill climb led by interest rate sensitive mega caps. The 30-share Dow Jones is up or was up almost 200 points or 0.5%, whereas a tech-heavy Nasdaq ended 0.46% higher in Wednesday's session. S&P 500 on the other hand was also up and gained about 0.41% in Wednesday's trade. Now, markets in November on the whole have been really upbeat. For the month of November, Nasdaq is up over 11%, Dow Jones has added by about 7% and S&P 500 has rallied by about 8%. European stocks also edged higher on Wednesday after two lackluster sessions. The pan-European Stoxx 600 closed 0.3% higher, with most sectors ending the session in the green. Asian markets, on the other hand, opened marginally lower this Thursday morning. As we speak, Hang Seng is down 0.36%, South Korea's Kospi is down 0.07%, and Japan's Nikkei was up actually by about 0.3% or so. Among other cues, crude was a big mover overnight. Brent crude corrected by about 4% before we went to sleep yesterday. And this was on the back of OPEC group of oil producing nations postponing their scheduled meeting on November 26. Reports also indicate that South Arabia may be also struggling to convince Angola and Nigeria to accept lower output targets. Now, crude, however, has rallied on an intraday basis and was last seen hovering around the $81 a barrel mark. Now, the 10-year treasury yields have pretty much been unchanged. We did slip below the 4.4% mark yesterday and hit a new 2-month low of 4.36%. But, the treasury yields regained those 5-6 basis points of correction and ended above the 4.4% levels. Meanwhile, the dollar index gained about 0.3% in yesterday's trade and ended at levels of around 103.9. Back home, Indian markets opened mildly in the green, with Nifty, with the first tick for Nifty coming in at 19,828 levels. The markets have since rallied further, and as you can see on your screen, by 9:30 a.m. this morning, Nifty was up 0.25% at 19,862 mark. Now, we have reclaimed the October swing lows of 19,843 and have also on an intraday basis touched the swing highs of September, which was of November actually, of around 19,875. Sensex has also, which by the way ended above 66,000, has rallied by about 150 points or so as well. Nifty Mid Cap 100 has scaled a new lifetime high. It's on a 16-day winning run now, and yesterday's traded ended above the 42,000 levels. And today we are building onto that. The small cap index, which by the way was the worst of the three indices yesterday, ended near the day's low, down about 1%, is up in the green today, up by about 0.85%, and has reclaimed the 13,805 mark. India VIX, the volatility index, sits at around 0.27%, and as of 9:30 a.m. this morning, it was at around 11.9 sort of levels. But with that, let's also welcome our first guest, our fundamental guest, Mr. Amardev Singh, Senior Vice President of Research at Angel One. Hello, sir. Welcome to the show. A very good morning to you.
Yeah, very good morning to you as well. Thank you.
Now, sir, I mean, the overall direction of the market has been fairly positive. We have rallied by about 1,000 points or so from that October 26 low of around 18,837 or so. But, before today's session, before today's rise, we were pretty much consolidating, where, we were seeing the market was losing some sort of momentum. Nifty was moving sideways, Bank Nifty was struggling, small cap index was struggling at higher levels, and, it ended near the day's low yesterday. So, what's your view on the overall markets? Is it time for us to be cautious?
I would say a couple of things that we should definitely bear in mind. One is that if you look at Nifty vis-a-vis Bank Nifty, Post the RBI, that notification came in for the NBFC's risk weightage enhancement. We've seen some significant, I would say, correction in banking stocks, NBFC stocks, and Bank Nifty hasn't been performing as well compared to Nifty. So that's one dampener, which otherwise Nifty would have, if you go back in time. So Nifty had made a high of 19,849.50 in October. So that's we are very close to that high today. So that would have been taken out quite some time back. One. Secondly, if you look at global cues and also the US inflation, because ultimately the trigger was the US inflation data, and going forward, how the US Fed is actually going to look at the interest rate. So they've been so that's one positive which has really triggered the markets. Then crude oil prices also, as you rightly said, crude oil prices have been on a cooling spree. After a significant rally, we've seen them corrected, and also they are trading in a consolidation zone, which is within the comfort zone of most of the, I would say, countries. Thirdly, I would say what we are also witnessing is that it's a broad-based rally. As you rightly said, the mid-cap is trading at record highs. We've seen significant up move in the small cap as well. So it's not only the and the large cap. Some of the large caps haven't really been doing much for the last few months. But overall, it has been a broad-based rally. That's one thing. Also, if you look at the some of the indicators like the advance decline indicator, that's a very good indicator of the overall breadth of the market. That has been positive. That has been significantly positive. Also, if you look at another indicator, which is the all-time highs, how many stocks are hitting all-time highs? So if you look at the trend of that, that also has been positive. So that really, and another important point is if you look at the India VIX. So India VIX is also within very comfortable levels. So that these all data tell me, and also what we are seeing is that global cues and global markets. There also we are seeing overall in some countries there would be, I would say, mixed trends, but overall if you look at the US per se, the trend remains positive. So that's been helping the markets. So these are a cumulative, I would say, cumulative factors which are helping the markets. And also if you look at the market from a technical perspective or a derivative perspective, we see that derivatives the last couple of days we've seen long build-up happening in Nifty, so that's one positive sign. And also, if you look at the trend, we are seeing that clearly Nifty has a major zone of resistance around the 19,850, 19,900 zone. Once that is taken out, then we are definitely headed for new highs. So one needs to bear that in mind. And also, there's not much to be on the worry front, because the first indication would come from India VIX, which is within reasonable limits. The moment it starts going above 15, 16, then there could be some cause of worry. And if it sustains above that level, that's the second thing. Because generally what happens, you'll find that there's a dip and then the market bounces back. So that's a sign of a market which is in for consolidation, but with a positive bias. So these are few cues which are impacting the markets, right?
So as you rightly mentioned, you know, the rally began obviously when the inflation print in the US came lower than expected, and of course Fed decided to maintain the policy rates for the policy meeting on November. But you know, the minutes came out yesterday, and while rate hikes maybe not on the cards, you know, it seems like Fed is not, you know, very going for it's not going to go for a rate cut anytime soon. But you know, the market has been pretty much expecting a rate cut of somewhere around 75 basis points to about 100 basis points by mid 2024. And on the back of that, we have seen tremendous rally. I mean, US markets are up almost 10%. We are up almost 5% or so. But do you think that, you know, this narrative coming out from US Fed that, you know, rate cuts are not likely anytime soon, will that hurt the sentiment, sir?
I would say, see, markets have factored in, because markets have also understood what the US Fed does and what it says. So there's a lot of understanding for the smart market participants. And also the US, if you look at the US Fed rate, US inflation rate, which the US Fed is targeting, that's sub 2%. So still from the current levels, which is, I would say, above 3%. So that clearly tells me that Fed doesn't want to go all out and say that, no, we've seen a significant decline in interest rates. in inflation rate. So they don't want to get into that mode because that would lead to more maybe liquidity or maybe more volatility in the market. So they want to, because central banks, they have the dual role of maintaining interest rates and also clamping down on the inflation, because that has a very important role. So I think, having said that, markets are anticipating that if the US inflation continues to be on the downward trajectory, that's the key point. If it continues to be in a downward trajectory, then sooner or later rate cuts would happen. So that's what the markets are factoring in, until unless we have some unexpected development in the market which could spike energy prices, because crude oil definitely plays a very important role in inflation. So till that time we don't see that happening, I would say I wouldn't read much into that, because that's more of a statement for investors that don't take things lightly.
All right. Sir, coming back to our own markets, three sectors, I mean, Nifty Bank clearly has been an underperformer, but three sectors in this November series have, been providing strength to both the markets in general and Nifty as well, being the IT pack, the pharma pack and the auto pack. The pharma and the auto indices, by the way, are at their record highs, and all three indices have rallied somewhere around 7 to 10% in November alone. What between the three, which index could perhaps take that leadership role and provide that further impetus for the markets to move to record highs?
The three sectors which you mentioned, one was IT, the other was pharma, and the third was
auto.
Yeah. So if we look at these sectors in particular, what I see is that the auto sector is also trading at record highs. So that and that long-term trend remains extremely strong. There's no doubt about it. So and if you look at the gains which the auto sector has had for this year till date, I would say that's roughly around 35% or so. Now coming to the pharma pack, pharma is also trading at record highs. So these two sectors are trading at record highs, and also what we are witnessing in these sectoral indices is that the trend remains extremely strong on the long-term charts. Now coming to the third, the IT has bounced back, but it's nowhere near its all-time highs if we go back in time. So we see that in December of, in the last quarter of 2021, it had made close to 39,000 levels or so, 39,400, 500 first quarter of 2022. So, and it's currently around 32,600 odd levels. So it's still a far cry from its all-time highs. So, but yes, the way IT has bounced back, that definitely is a positive thing. Majorly, we'll have to see Infosys, TCS, how these stocks perform. They've also bounced back. But amongst the sectors, pharma definitely looks good. Some of the pharma stocks could do extremely well given the structure of the markets. Even auto, it's going to be more stock specific. But yeah, these two sectors are definitely trading very strong and firm.
All right, that's the view from Mr. Amardev Singh. Sir, appreciate your thoughts. Appreciate you joining us here on First Take. Thank you, sir.
Thank you. Thank you for having me.
But before we move on, let's also look at how the markets are doing. I'm made to believe, Nifty has given up some of its early morning gains and it has in fact slipped below the 19,850 mark. As you can see, as of 10 a.m. this morning, Nifty was still up 0.1% or so, and was trading at around 19,832 marks, so around 35-40 points off the day's high, which by the way came in at around 19,875, which was also the November swing high. Sensex on the other hand has also moderated, it has given up about 70-80 points or so from the day's high, and currently sits at around 66,104 mark, up 112 points or 0.12% or so. Nifty mid cap 100 on the other hand again given up some gains, some of the early morning gains, and has slipped below the 42,100 levels, and as of 10 a.m. this morning, Nifty mid cap 100 was trading 0.14% higher at 42,086 sort of levels. The small cap index is a clear outperformer today. As we all know, yesterday it was the clear underperformer, declined by about 1% or so, and as of this morning, as of 10 a.m. this morning, actually it's up 0.85% at 13,805 mark. Volatility has slipped and India VIX has slipped by about 1.22% as of 10 a.m. It was sitting below the 12 mark at 11.72 level. So that perhaps augur well for the bulls. But with that, let's also welcome Kush Bora, founder of kushbora.com. Hi Kush, a very good morning to you. Thank you for joining us here on First Sec.
Very good morning. Always a pleasure to be here.
Now Kush, we are about, we have actually over 1000 points from that October swing low of about 18,837 or so, and finally yesterday we managed to close above the 19,800 level. We are building on to those gains, have reclaimed that October swing high of 19,843 on an intraday basis, although we have corrected from that 19,875 which was the November high. What's your overall, appraisal of the market? Are we heading towards new lifetime highs anytime soon?
It's just a matter of time. I would say, we're headed there for sure. The run may not be as smooth as we want, but you're right that, the recovery has been stupendous. I'm sure everyone expected this kind of a move up, on the indices, at least from the momentum, front. The direction was perhaps clear that, the Indian markets are a buy on dips market and continue to remain so. But the pace of the, recovery has been stupendous. Now, if I just come in from a technical angle, 19,800 is more of a psychological resistance. The actual, technical resistance comes at around the level which Nifty is at currently, which is 19,850, because that's the high that it made in October before it sort of, broke down and made that 18,800 kind of, move.
Right.
So we are very close to that. I don't see Nifty crossing this level and closing above that, at least not by a big margin today, at least given that it's a weekly expiry. Perhaps tomorrow and the next week, once this weekly expiry hangover is over, we could make a dash towards 20,000. And once that is taken out, then 20,200 isn't too far, is it?
All right, that's the view on Nifty. 20,000 on the cards, 20,200 could also be seen on the index. But sir, also want to touch on Bank Nifty. Quite an interesting expiry day yesterday. Wild movements we saw when the index slipped to around 43,300 sort of levels, and the index had been in the last few sessions taking support around the 20 and the 200 DMA. We broke below those levels on an intraday basis, closed above them and near the 20-day moving average. Up, the index overall is up about 139 points or so, trading in the green. What's your view on Bank Nifty? Was the yesterday's sharp rise from the day's low, was that the pivot we were looking for?
Well, we could, deep dive into this, but my only thing is that it's an expiry day move, and,
Right.
we don't read too much into an expiry day move because, the max pain theory sort of tends to prevail, which is wherever you see the maximum open interest built up, on the put and the call side, the indices do tend to close, either within that range or close to that, magic number where the open interest is the highest. So it could perhaps be just that move. And you're right, see, the Bank Nifty setup isn't really very encouraging, just yet. There is a gap from 43,800 to 44,100 that needs to be filled, the one that came when the RBI announced the, curbs and the measures for consumer lending. So that's a range that, the Bank Nifty will look to test, even on the upside. Had this not been, the party spoiler, we could have perhaps been trading close to the 20,000 and above 20,000 mark as well. So this will continue to remain under pressure. 43,800 is the level that I'm looking at. A closing or two above this could push this index higher. In fact, on the contrary, if that doesn't happen, then we're looking at 43,300 and 43,400, where the 20-day moving average and the 200-day moving average coincide. If we break down below 43,300, then I'm afraid 42,800 kind of levels also come into play. So very delicately poised right now, Bank Nifty. Very interesting to watch. If the FII buying does sort of return or the selling quantum does stop, then banks could take support here and rebound. So very interestingly poised. I would actually play on the Nifty rather than the Bank Nifty at the moment.
All right, play on Nifty, avoid Bank Nifty for now. But moving on to specific stocks, one of the stocks that we have been very closely tracking since its listing is Honasa Consumer, the parent company of Mamaearth. Now they came out with a Q2 report card yesterday. The profit has nearly doubled to 29 crores or so. Revenue is up 21%, as you can see on your screen. Revenue for the second quarter rose by about 21% to 496 crore. Net profit grew by 93 crore for the quarter on a year-on-year basis, so pretty much doubled. EBITDA, the earnings before interest, tax, depreciation and amortization, were up 53%, and margins expanded from 6.4% in the year ago to 8.1% in Q2 of FY24. Overall, Kush, the numbers are looking rather healthy, and wild movements again we have seen in this stock. After the listing, we saw deep correction where the stock slipped to about 256 sort of levels, corrected by about 20% or so since its listing price, and then Jefferies came out with its buy call, and with a target price of 530, implying upside of 50%, and from there on we saw a good bit of rally where the stock has gained about 10-15% in a matter of few sessions. What's your view on Honasa? Is that a stock one can look at, and what are the levels you are tracking over there?
Well, so very honestly, since it's a very recent listing, there's very limited data on the charts to sort of, make any kind of comment. I mean, the only thing I can say is, kudos and congratulations to everyone who invested in the IPO and didn't perhaps sell off when the stock, hit the lows and went, close to 250 odd levels.
Right.
So if you've been holding on, why not ride the momentum rather than perhaps, sell it out early? We typically have a very clear strategy in such plays, momentum plays, which is a trailing stop loss. So if I had this stock and if I was holding, this one till now, I would place my stop loss at 400 and, just ride the momentum. If it comes below that, might as well take some money home.
All right, that's the view on Honasa. Perhaps take some money out, but ride the momentum for now. Another new age company stock I wanted to touch on with you was Zomato. Now we have seen some bit of weakness set in the last 5-6 sessions or so, where the stock has given up about 8% or so. But a clear outperformer in 2023. The stock turned multi-bagger last month. It's still up about 90% or so in 2023. What's your view on Zomato? Is the stock taking a breather perhaps over here, and we could see more upside from here on, or is this where the ceiling was for Zomato?
So let me just put things in a slightly different perspective. When the stock started to break down after the after the IPO, it did see a bit of a run up, and then it started to cool off. And if you remember, if you go back to December 2021, 130 was the level where a lot of buying had come in, from various participants, be it retail, HNI, and the stock took a while before it convincingly broke down below this 130 level. So I was not surprised one bit to see that, even before we hit that 130 level, this is a bit of a preemptive selling, as we call it, a bit of a self-fulfilling prophecy that 130 was supposed to be a resistance for that. And everyone thought, why wait for that level? Even if it's a marginal loss, from 130 levels, take some money, take the money home, take your capital out with a marginal dip. Remember, people had seen levels of 40, 40, 45 on this one. So everyone was happy to perhaps take just a 5 rupee cut on it. Right. That's what we are seeing play out. I think once this selling pressure is over, the stock will resume its uptrend. So, in the near term, the stock could see pressure, but I'm happy if anyone's looking for a fresh entry into this stock, the current levels, 114, in fact, I would say let it slip to, even 105 kind of zones. So this 10 rupee range, this 10% range is a good range for you to start accumulating this stock. Once you do that, 130, the resistance zone will act as your first target, and once that is taken out, don't be surprised that the stock moves to 150 and higher levels also. So more of a positional play, playing out beautifully on the technical charts. So this is an accumulation zone. Gradually start accumulating these stocks in this dip.
All right, that's the view on Zomato. Another stock, Kush, I wanted to touch on with you was TVS Motors. Now, TVS Motors has in fact scaled a new 52-week high. The stock, I'm made to believe, is up 2% or so, and made a new 52-week high of about 1780 rupees. And if we look at the comparison between all the two-wheeler stocks, it has been a clear outperformer. On a one-year basis, TVS Motors is up about 65%, whereas Eicher Motors is up about 13% or so. Bajaj is also up about 60%. So very close returns, but TVS has been an outperformer. What's your view on TVS? Perhaps time to book some profits now, given the kind of returns we have seen in the past few months and the year on the whole?
So let me just quickly address iShares here. We know there was, some competitive pressures that came in, on iShares, and hence, there was a pause that the stock took, a knock that the stock took, and then it's starting to revive again. So it not be a bad idea to, invest in a stock like iShares, which has been a wealth creator over the last, many years for investors. So, just might turn out to be a buying opportunity this dip. As far as TVS Motors go, well, it depends on your time horizon. If you're a trader, you might want to take some money home. In fact, we had also recommended this stock as a part of our advisory service, for targets of 1800, and we are fairly close to that right now. Right. So if you're a trader, you might want to take some money home, book your profits. Not a bad idea because the stocks actually run up quite a bit. But if you're a long-term investor, there isn't anything that is suggesting that, the momentum could stop or halt in the near term. So why not, hold on to this one? We won't be surprised to see, 2000 or, above kind of levels in the stock in the coming months. Fresh entries should only be made on dips. But if you're a trader, take some money home. And if you're an investor, just continue to, hold, your positions.
All right. That's the view on TVS Motors. Take some money home if you're an investor. Perhaps, if you're a trader, but stay invested for long-term gains. Now, Coach, before we let you go, any 2-3 trading ideas that, investors can perhaps look at for the short term?
Sure. From the short-term perspective, persistent systems is, something that is on our radar. It's a very clear momentum play. The IT space is doing very well, especially the mid-cap IT space has been doing well. And persistent, from the mid-cap space, and HCL Tech from the large-cap space, they've been our picks, our top picks for a while now. So I would suggest, if someone's playing for momentum, persistent is something that you should have on your radar. 6900 and 7100 are the levels that we're looking at, in this current rally. And 6500 is where I would place my stop loss. We also have something from a long-term perspective, which is Sundaram Finance. Now, incidentally, this stock has seen a lot of volume action over the last, a couple of months, and the price action has also been very encouraging. The stock was consolidating very firmly, close to 2600 levels, as early as I think early September. And then the breakout came and the stock is again consolidating. So we believe that the stock is again making a base for a sharp up move from here. So if your investors want to participate, in Sundaram Finance, 3450 and 3600 are the two levels that, we're looking at as targets. 3000 is again a strong base that could act as your stop.
All right, Sundaram Finance and persistent systems are the recommendations from Kush Bora. Sir, appreciate your thoughts, appreciate you joining us here on First Take.
Always a pleasure. Have a great day.
Thank you. But before we wrap things up, let's also look at how the markets are holding up as of 10 a.m. I'm made to believe Nifty is pretty much where it was at around 10 a.m. this morning. We have not moved much from that 19,830 sort of levels that we were seeing 10-15 minutes before. Nifty as of 10 a.m. was up 0.13% at 19,838. Sensex is holding above 66,000 as you can see on your screen. As of 10 a.m. it was up 0.13% as well. Mid-cap 100 has been pretty much trading around that 42,100 sort of levels. Remember, it has touched a new lifetime high today. And the small cap index has been a clear outperformer in the opening trade. It corrected by about 1%, but today we are seeing good bit of recovery, and this index is up by 0.86% at 13,807 as of 10 a.m. But with that, it's a wrap on this edition of First Take. Keep watching News 9.